All right, good morning. It is Monday, March the 11th, 2024. We hope you had a nice weekend. Saturday was a pretty nasty day for weather here, particularly in the morning here in Charleston. My girls' soccer team, we got rained out. We actually got rained out on earlier this week too. So I'm gonna have to run the girls pretty hard. We're playing a little bit of catch up here with conditioning. So Keegan's not gonna like that news, but then my goodness, Sunday, yesterday, maybe the most beautiful day of the year so far. I mean, it was the temperature is perfect. There's a little breeze. The humidity just got pulled out. So we spent pretty much the entire midday, afternoon outside. Went for a little walk. Took my kids for a bike ride. Just beautiful, beautiful. I'll be quick here this morning. We're week 3 of reviews. We start this morning this week. And we say it every time, but it's so fun hearing from everyone and kind of summer plans and how families are doing. The first couple weeks of reviews has just been awesome. So looking forward to week 3 here this week. Looking at markets last week. Okay, so the big economic figure that came out was the U.S. employment, the February report. Okay, headline number comes out. It's like, whoa, that was strong. 275,000 new jobs. Okay, and then you look further into the internals, and it's so some things that are kind of concerning in here. Most importantly, probably being the average hourly earnings. Decelerating, okay, so from 4.5% to 4.3% year over year, okay, and then you saw the unemployment report actually tick up from 3.7 to 3.9, okay, so definitely an employment report that the Fed would probably have some concern with, would probably certainly add to the argument that that they could potentially start cutting rates this summer. Okay, you pair that report with the ISM manufacturing data that was very disappointing that came out last week. All right, and so on that, and again, like everyone has known, like with rates as high as they are, it's challenging for many businesses to be borrowing at those rates, for capital projects, things like that. So like we knew at some point this was going to start to slow. Is this it? Like it could be, where things start turning the downside for the employment report. Now, what makes markets so fun though is, again, now that the Fed has the silver bullet in their back pocket with rates as high as they are, you see the economy start to slow. Now you can start cutting rates, incentivize, new borrowing, new money coming back into capital markets. I don't know, it makes markets really fun, at least for nerds like us. This week we're going to also get some really important data points. So we get February's inflation, so the CPI is released. We also get retail sales, right? So 2 more really big data points that the Fed will use along with that employment report from last week to determine what they think monetary policy should be in the months ahead. So on all that, I forgot to mention, so U.S. equity markets are basically flat, maybe modestly lower. International markets were actually mostly higher, close to 2% higher last week. So again, just that importance to be diversified. We don't know when that next year comes where U.S. markets do poorly, but international markets do quite fine. There's plenty of examples of that in history. So with that, we hope you have a wonderful week. And we'll talk to you soon. Thanks.